Hello guys, and welcome back to another YouTube video. Now yesterday I was able to catch a beautiful trade on the euro, which I'd love to explain. On the screen right now you'll see the profits from yesterday. So yeah, going to break it down and basically show you guys exactly how you can basically utilize this strategy in order to take trades in the Forex market. So let's break it down. So looking on the euro here, this is on the 5-minute chart. Now I'm not going to get into everything, but essentially all I'm going to look for is when you're on the smaller time frames, so lower time frame analysis on how to get in. There's so much more on the higher time frame that you have to take consideration. For the purpose of this video, I'm just predominantly focused on the smaller time frames. Okay, so I wake up, I get about my day, and as soon as I wake up, I look at this chart and I try to utilize the Asia range. Okay, as you can see here, this color shaded in gray, this is the Asia range sessions. And if I come in the top left and I come to Asia range and I come to the settings, so not here settings, you can see these are my settings. So inputs, 1 day, 9:015, style, here's my style, visibility, that's my visibility. So you can basically copy exactly what I have here for my settings. What I like to mark up is the high of the Asia session, which should be Asia high liquidity. But also, this could be deemed as buy-side liquidity at here. Essentially, what we're saying is the buyers are interested at this level, and there's going to be some form of liquidity at this high, which we might want to retarget and grab. But also at this low here, this is what we called Asia low liquidity, which is the same, but just on the sell side. Bottom. Okay, so when I wake up, I'm trying to see what price is doing at this level and where price manipulates and basically what price does. So as you can see here, just before the Frankfurt Open, so Frankfurt Open happens and bang, we get this injection of liquidity happen. I can see price was just moving in this sort of range. It was sideways moving, wasn't really direction. Bang, 7 o'clock came, Frankfurt Open opens, and what do we get? We get a massive impulsive candle straight to the bottom, taking out Asia low, leaving imbalance while doing so. Okay, so normally this is an indication that it's something called AMD, accumulation, manipulation, distribution. Essentially, what we're saying is price accumulates, we manipulate lows, and then we're going to distribute in another direction. That's where we look to get into the market. So, is it fair to say that this hit before the injection of liquidity was a ranging market? Price was moving in a sideways fashion. That is correct. And then this move downwards. This is your manipulation when price is sweeping out the lows in the market. And normally when we have that run of liquidity where we sweep out the lows, we normally want to play the next run up and take the buy side. Okay, it's almost like a game of tennis. You hit one side, you don't want to attack the other. Okay, and this normally happens during London session, anywhere between Frankfurt Open at about 7 to about 11, 12 a.m. is where I look to get into the market during this period, because I predominantly only just trade London session. So essentially, once I have all these formulas in place, I then look for when price basically takes a high, or we see the momentum shift. And as you can clearly see with this move here, let me zoom in. We'll go down on the smaller time frames. But we started to, when we took this low, wasn't really convinced, was we? Was moving in this sort of fashion where a correction downwards, a descending sort of channel here. But that's not what I'm interested in. I'm looking at the highs. I'm looking at all these highs, and I'm waiting for a switch. Okay, and clearly at this high we had a switch, which I want to go on lower time frames to pinpoint. This is the 5 minute. I want to go down on the 1 minute. Okay, so 1 minute is here. Okay, let me just quickly rewind play so we're not messing about when I go on the smaller time frames. Okay, perfect. So now looking at this on the smaller time frame, we really get sort of in-depth aficionation of what we're seeing. So we see price come up, and what we see price do is basically come down, come up, come down, come up, come down, and a strong shift in basically price moving. And what we see price do is take out this high in the market, which is a market structure shift. Any sort of excuses to get into that market. We also see price trade back into the Asia range, which also is a massive indication for me. It's showing that price basically trading back into Asia range. We want to attack the highs. And we also sweep out these lows here with the X. Okay. So sort of textbook example of want to get into this market and the fashion we do so would be you have a area of liquidity, being some sort of pool liquidity, that being Asia, that being the sell side, whatever we want to be. We see price come, we then see some form of accumulation correction down here. We see price manipulate those lows and then push up and push higher. Exactly what we're seeing here with this market structure shift. Price is now shifting from this level of the market here. Once you have that, you then have a leg in the market, which is something you can obviously look to get into trades with. Once you have a leg in the market, we can mark it up from swing high to swing low, which at this instance would have been about here. That's exactly where you want to get into the market. Okay, so let me now jump back into my time frame of entry, which was the 5 minute, and show you what else was interesting, what we saw. Let me get rid of that. What we saw on the 5 minute was this chart pattern or candlestick pattern, which is obviously the morning star, okay, where we see the bearish candle, doji candle, bullish engulfing, sweeping this market structure shift, okay. Beautiful chart pattern indicating that basically the buyers are stepping into the market. But what we see here, which is something I love, is inefficiency, but it's not just any inefficiency, it's something we call a balanced price range, which is predominantly found on these sort of morning star candlestick patterns. And essentially what a balanced price range is, let me just type that out, BPR plus, in this instance, we're looking for buyers to step into the market. It's a balanced price range. Essentially what we're saying is there's a form of inefficiency. There's inefficiency running through sort of this level in the market inside our OTE, which is the optimal trade entry between the 0.62 and 0.79. It's a high probability. Now we have this market structure shift. We swept these sell side liquidity. We swept this Asia liquidity. We're going to see ejection, or basically a move to buy side and sweep up buy side. So that's exactly what happened. And let me actually just pinpoint my entry on my MT4. So it was long position. So predominantly I did want to get in at this OTE level, but I think this, yeah, it was. The spreads got me in a bit higher, which is fine. I understand brokers need to make their money. And the entry was here, 8792, perfect. Okay, so I'd done everything I needed in order to take the trade. Okay, so I normally split myself up to the entry strategy, exit strategy. So you need to have two forms of strategies basically to get in and out of the market. I just want to get back to my exit, which was above this high. Wait, let me just put that in. Coordinates. I got out at 887, which is just before, yeah, because of the way it moved. So, okay, cool. But I just need to know about that level in the market. Okay, cool. So we have the entry plan, exit plan. I preach and preach time and time again. Everything on the left-hand side here, with where this line is, you see, this is your entry strategy. Everything on the right is your exit strategy. You need to know when you need to get out of this market, okay? And that's just as important as the left-hand side of it, okay? So that's my entry there. Now, the first point of the exit strategy is knowing when to get out of the market when you're wrong, okay? And that's something called a stop loss. So we have this low here. Now, as you can see here, that's my entry. And if I just move the SL here, you normally want to put below the low. Too tight, I think it's not good, because don't give yourself breathing room with sort of slippages and anything that can go wrong with the broker, not so much your trading. If price feeds were one-to-one all the time, then you can go as tight as you want, but they're not. So I normally allow myself about 1.5 pips. So that's 43 plus 15. I'm normally give that. So in this instance, the SL would have been about 58. As you see there, okay. So that's where I like to put my. There we go. That's where I like to put my SL. Just gives me a bit of breathing room in this trade, which means I'm allowing this trade to basically mess around, do what you want. You come all the way down here, but if you want to reserve, happy days. Because I do see it happen. You sometimes see price give yourself 100% retracement, and then we see buy step into the market, which is fine. But that's why I give myself that breathing room of just there to there to allow the trade to breathe. So exit plan 1, stop loss in place straight away. Exit plan 2 is basically where I'm going to set my take profit. In this instance, it was just Asia high, giving myself a 2.79R risk reward. I also just want to set here because the market is still bearish. Higher time frame, I'll let you know, we're in a 4-hour imbalance, a massive 4-hour imbalance, and we just tapped into it. So I was entertaining the theory of we're gonna have some injection of buyers step into the market at this low. Hence why this chart, the entry strategy worked. But at the same time, I'm very aware that we're still bearish in terms of order flow in the market, flowing in the market. So I didn't want to reach for the stars and say this is a trending market, we're now changing, we're now bullish. I'm fully aware of the situation and the market settlement. So TP was just at Asia high. Normally I do like to extend and go for standard deviations, etc. further on. In this instance, that was the full TP. But I also looked at this, obviously, when we first started and looked at this, was this accumulation phase in the market, okay? And normally when you see price, I mean, this is very minute. This is obviously 5 minutes. It's not a major, but it's still an area of consolidation, and normally that's decision making. So what my exit plan was is 25% I'd take off basically at this high here and in this accumulation phase, which I did. So 25% I said to myself I was going to take off from this position, and then I was going to leave a runner to full TP and hit the buy side liquidity at the Asia high liquidity, and that's exactly what I did. And I'll put the screenshot of the trades on here once more so you can see it. See the precision, but that's essentially what I did. I let the runner go out to the Asia high. Took me out. What was my full TP? Because it was 9. It was 954. Let me just get that right there. 9549. 8. No, it's the entry. That's why. 95. Oh, perfect. Yeah, it was exactly that. Cool. It was exactly that high, and then obviously stopped me out. And yeah, it's just so important to have that exit strategy. You can enter anywhere in this market, it's fine, but knowing when to get out is just as important. Risk management is the most important thing. I stress this enough. So many people try to learn these concepts and kind of get their grasp of what we're doing here. They tackle the market, they hit a few successful trades, but then something called greed, fear, doubt all comes into their minds when trading, and they end up losing everything. And that's because they can't control what's up here, and that's the most important thing. If you can control up here in your head in trading, you will be a successful trader in these markets. I'm a firm believer, not all, but I'm confident that if you give me a strategy that's been proven, and I'm a firm believer basically that the majority of strategies do work out there. Any sort of retail strategy, any sort of strategy, I'm a firm believer they do work. You're just not using it in the right context, and you're not applying the correct risk management to it, okay? Same way with this strategy. I see so many people fail at this strategy, and I think they fail because they haven't got the psychology and haven't got the correct risk management, which makes a trader. You go to anyone in the sea, anyone in anywhere. I'm currently networking and dealing with these type of people. The first thing they ask for is, what is your risk appetite? What is your risk? What's your exposure? How do you hedge? How do you position yourself in the market? They don't really care about your strategy. They don't. Strategy's like the least of their worries. All they worry about is how you're going to protect their £10 million. That's what they're worried about. And that's how, even that, okay, fair enough, we're small retail traders managing not so much compared to what these big boys are in the banks talking about billions. But we still have to use the same concepts. Trading 1,000 is the same as trading 1 billion. You trade it the same, but it's making sure that the risk management is not there, because you can trade the same but risk 10 times per position, and that's not really smart, is it? So yeah, that's a bit of food of thought coming to the end of this video. Risk management psychology is key. Anyone can learn this strategy. Anyone can learn any strategy, but can you survive the market through your mind? That is the most difficult part, and I've been doing this now for 9 years, coming up to a decade. That took me a whole 5 years to learn. Some people learn it straight away. Some people are more advanced in terms of their knowledge of the psychology in its markets, and congratulations to them. It took me 5 years, and I'm happy that it took me 5 years, because it wasn't easy in it, and I just never gave up. But yeah, guys, that is Euro. beautiful trade, beautiful precision, and yeah, very, very happy with the overall outcome. And look, if you want to see more videos like this, please like, comment, and subscribe, and I will see you in the next video.